Lesson 2 is on the bookkeeping and accounting cycle. The bookkeeping cycle is a cycle that starts with the recording of financial transactions from source documents and ends with the trial balance. Each time the business sells a product or delivers a service to a customer, buys items from another business, borrows money, or invests money, a financial transaction takes place. This financial transaction must have a source document. The information on the source document is recorded in the applicable journal, and the amounts in the journals are added up to provide totals for each column. The totals from the columns in the journals are then posted in the applicable general ledger account. The general ledger accounts are closed off at the end of each month, and the total from each account is transferred to the trial balance. This cycle takes place every month and is called the bookkeeping cycle. Source documents. Source documents summarize transactions in businesses. Examples of source documents are cash slips, invoice, check counterfoil, EFT payment confirmation, petty cash voucher, credit invoice, credit note, and journal vouchers. The information on these source documents are summarized in applicable journals. The journals group transactions together. Any transaction that caused the balance of the business account, bank account, to increase is recorded in the cash receipts journal. Any transaction that causes the balance of the business bank account to decrease is recorded in the cash payments journal. Purchases from the petty cash box is recorded in the petty cash journal. Purchases done on credit from suppliers is recorded in the creditors journal, also called the suppliers journal. Returns of goods to suppliers is recorded in the creditors allowance journal. When the business sells products or services on credit to the customer, the transaction is recorded in the debtors journal. When the customer returns a product to the business, the return is recorded in the debtors allowance journal. Any other transaction that cannot be recorded in any of the journals is recorded in the general journal. The journal columns are added up at the end of each month. The totals are posted to the general ledger accounts. The general ledger accounts are then balanced and closed off at the end of each month. The totals from the general ledger account is then recorded in the trial balance. The trial balance is drawn up each month. The accounting cycle includes the bookkeeping cycle, but ends with the income statement and balance sheet. The income statement and balance sheet are also called financial statements and only compiled at the end of the financial year to show the financial performance and financial position of the business. This is an example of an income statement, and here we have a balance sheet showing the financial position of the business. The accounting cycle thus includes the bookkeeping cycle, but ends with the annual financial statements. That is the end of lesson 2.